Happy Friday, Brian Manning here with your weekly update, giving you some information on what took place in the markets this week that affects mortgages and mortgage rates. So let's see. Monday, stocks were a little bit lower this week. Bonds were moving higher, and a lot of this had to do with lower oil prices that were dragging down the stock market. Tuesday this week, we had the Case-Shiller Index. Case-Shiller gives us feedback on 20 cities across the U.S. and lets us know what's happening as far as housing is concerned. And in December of last year, we had Case-Shiller Index showing that housing values were up 4.5% year over year. So really solid, good, consistent appreciation we're seeing across the markets right now. Luckily, Denver happens to be one of the markets in the Case-Shiller Index, so it gives us a lot of accurate information as far as what's going on in the markets. Wednesday this week, we had the Dow up over 1,000 points in the month of February, which is just phenomenal. Stocks have been on a tear lately. We've talked about this in our prior updates, and they've just been on an incredible bull rally for quite a while now. And then also Wednesday this week, we had Janet Yellen starting her two-day testimony. She does this twice a year and gives feedback on what the Federal Reserve is doing. So all eyes are on Janet Yellen, trying to figure out what's going to happen with the Federal Reserve and interest rates. And Janet Yellen was pretty clear in saying the Fed is not in a rush to raise interest rates, and doing so could certainly undermine all the work that's been done over the last couple of years to help get the country out of a recession. So, also kind of getting a feel that labor markets are not as strong as they hoped that they would be. So, certainly could see a rate hike in June, maybe September. Very wishy-washy, and the Fed is all eyes on the markets right now and the economy and inflation and employment to try and figure out what they're going to do. So we'll have to wait and see. Thursday of this week, we got initial jobless claims. So this is a report that tells us how many people filed for unemployment claims last week. And we had 313,000 new initial jobless claims that were filed. So it's the second time in the last 3 weeks that we're above 300,000 new claims, is a pretty significant number. And still waiting to see if this is a byproduct of what's happening in the oil industry. Oil rigs shutting down, and is this causing future or higher unemployment claims in the U.S.? And today, and really throughout this whole week, and for quite a while now, we're just seeing lots of volatility in the bond market, and especially now, since the Federal Reserve is not involved in QE or quantitative easing and consistently purchasing bonds, we're just seeing a lot of volatility here. So yield on the 10-year Treasury has been moving up and down. Mortgage rates have moved up and down accordingly with this, and just a lot of volatility. And then we also got GDP today, so gross domestic product, fourth quarter of last year, it came back at 2.2%. Certainly not great, not in the 3% range. It would just show a really strong, robust economy, and certainly economic activity is not as robust as a lot of people were hoping it to be. So all in all, mortgage rates are still amazing. Housing market's really strong, and it was just another great week. I'll be around all weekend. You have any questions, any buyers need to get pre-approved, give me a call. I'd love to help you any way I can.